Okay. Hello, everybody. We are now live with Money Monday live training. It's been a while since I've talked to you all live because I've been so busy in the last several weeks. I had to put up some recordings. If there's anybody with me today live, would you please put a little note in the comment that says you can hear me okay? That would be great. Occasionally I've had trouble with the audio. So I'm going to go ahead and get started. Looks like you guys can see the screen just fine if it's looking like what I'm seeing here. So today, as I said, we're going to talk about bank failures and specifically how these bank failures are affecting USDC, if at all. I've got a bunch of great clips here that I've taken off the internet. I'm going to make this screen a little bigger there. Maybe we can see a little bit more. So I'm going to start out by just sharing what I have found, and I'm just gonna talk through it. And if anybody's with me and has a question, please feel free to post it. And if you have a question after watching the recording, please feel free to post that as well. So these clips that I'm going to be sharing with you today have mostly come from people that are in my private mastermind group. It's a fantastic group. We share a lot of information with each other. Some of this information I've researched myself. Some I got from links that were shared in the group. The first one here says, 3 banks now gone in the USA. And those are the 3 I'm going to briefly talk about today. Mostly I'm going to talk about the just one of them, but I'm going to touch on the top 2 here. So the 3 banks that have gone downhill, they've gone out the door, so to speak, is Silvergate Capital, Silicon Valley Bank, and Signature Bank. Now, since this was posted just not that long ago, this particular tweet, that actually isn't 100% accurate anymore, and I'm going to get into that more later on in this talk today. Silvergate Capital is gone. They did go bankrupt. Nobody wanted to buy them. And some comments I've read have said they just had too many crypto clients, and I'll talk a little bit more in just a moment why that mattered. Silicon Valley Bank is one that just happened. They just closed their doors, but it looks like they're going to be, they're not going to go 100% under, let's put it that way. And I have news, somebody's actually already, as of today, not that long ago today, stepped up and looks like they will be buying Silicon Valley Bank. I'll talk more about that in just a moment. And the third bank is Signature Bank. I didn't have time to look and see if they've already gone under or if they're just about to. The problem with Signature Bank is they just don't have any liquidity. There could have been a bank run on them, which is exactly what happened to Silicon Valley Bank. A bank run, everybody showed up wanting to get their money back all at the same time because there was some negative news that came out, and it sunk them. It'll sink any bank. So those are the 3 that I'm focused on today, and I'll also be mentioning another one, a 4th one that could be coming up and could be having problems and could be the next one on the chopping block, so to speak. We'll see what happens. Okay, so let's talk a little bit more about Silicon Valley Bank. And this is a tweet that came from Circle, and Circle has a strong connection to Silicon Valley Bank through the crypto coin USDC. Silicon Valley Bank is one of 6 banking partners that Circle uses for managing the 25% portion of USDC reserves held in cash. While we await clarity on how the FDC receivership of SVB Bank will impact its depositors, Circle and USDC continue to operate normally. So what that means is USDC is a stable coin. And what makes it stable is that it has assets backing it. And one of the assets that it has backing it is cash, and another one is treasuries. And they may have others. Those are just the 2 I know of for sure. And a lot of people were panicked about USDC, and that's what caused it to lose its peg because they thought, that it was in trouble because of the amount of money it had at Silicon Valley Bank. But the truth is they use 6 different banks, according to this tweet, to hold their cash reserves. And only 25% of the USDC reserves are held in cash, and only a small portion of that was held at Silicon Valley Bank. When I finally wrapped my head around that, that made me feel less concerned about USDC, and I ended up not doing anything when it fell down. I wish I had actually gone in and made a trade. I'll talk more about that in just a moment, but it was like 12:30, 1 o'clock in the morning when I saw that it depegged all the way down to 90 cents, and I was tired and wanted to go to bed, so I didn't take advantage of the opportunity. So let's move on and see what else I've got in this presentation today. The Silvergate Bank. Now that was the first one on the list up here, I believe. Silvergate Bank, which was also sometimes called Silvergate Capital Corp because that's who actually owns the bank. Silvergate Bank was the FTX bank. So when FTX collapsed, Silvergate followed there shortly. So Silvergate was another it was another thing that happened because of the FTX collapse. And that's unfortunate, but that's what happens when you get in bed with the wrong people, I guess. And FTX Bank, or FTX, was just a bad company, it appears, now that we've learned all about it. So here was a little piece of an article from Bloomberg, and this is going to talk about Silvergate Bank, Silvergate Capital Corp. Silvergate spent its final days under siege, bombarded by short sellers, deserted by depositors, and shunned by business partners. Executives at the crypto-focused bank were face-to-face with U.S. regulators at its La Jolla, California headquarters. Officials from the FDIC had arrived at the firm's offices intent on averting the U.S. bank system's first casualty from the crypto implosion. Among options they discussed were finding crypto investors to help shore up liquidity among the bank's mounting losses. But a desperate round of calls to potential investors failed. No one wanted to come to the rescue of Silvergate. So Silvergate did go under. And I'm going to go on and talk about some tweets from one of the coaches in my mastermind groups, a guy that I like the way he thinks. A lot of what he shares is stuff that I believe in. And so I'm going to share it in his words. Between the liquidation of Silvergate and Silicon Valley Bank, there is increased risk of systemic bank illiquidity, meaning that banks don't have any money. Illiquidity just means there's no money to get the job done that a bank gets done, making loans, giving, money to depositors, whatever it is. Bailout of SVB is not the same as some of the 2008 banks. Consumer deposits will be made whole. Now, this is a fairly recent finding that just came out that SVB depositors will not lose their money. The company is going down. Shareholders will lose money, and the company will be put up for auction. Likely larger institutions will capitalize on this opportunity, and I can tell you that for sure happened as of today, and I'll tell you who in just a little bit. So this is really good to find out that everyday people like you and me, if you had money in any of the SVB banks, and they had a bunch of banks across the country, you're not going to lose your money. Apparently, you will be made whole by the FDIC. Now, Silvergate, as we've been talking about, is a bank that provided services to crypto-related companies, as well as providing the Silvergate exchange network for asset transfers. Silvergate, Silvergate's insolvency was confirmed a while ago. This isn't new for many people. Silvergate, many people have known for at least 2 weeks now that Silvergate's gone under, but last week, Silvergate announced that they would be liquidating the bank and closing down operations. Just confirming it here with you. With the pace of rate hikes moving at an extremely fast pace, bank profits can eventually take a hit as less and less borrowers seek loans. Furthermore, Silvergate is tailored to the crypto industry, was tailored to the crypto industry, where borrowers have defaulted or become insolvent left and right, literally. So all these factors, plus many more things that we probably don't even know about, have led to a simple outcome for Silvergate. And I love the way Zach put this. They had more liabilities than they had assets. And when that happens at a bank, there's nothing left to do but get sold to somebody else or close your doors. And in the case of Silvergate, they closed their doors for good. As we've seen historically with With 2008 being the most recent example, bank collapses can have a domino effect. So that's what everybody's worried about right now, this potential for the domino effect. With significantly fewer players in the crypto banking industry than in the traditional banking industry, it creates a risk of systemic tech banking purge. And I agree with him. This is exactly what everybody in the crypto world is holding their breath about right now, is just how far is this going to go, and will crypto survive? This has already begun to occur with Silicon Valley Bank. Most of the time you see that referred to as SVB, but occasionally you'll see it referred to as SIVB. Seeing a massive deposit drain on Thursday. And Silicon Valley Bank is a major player in the world of venture capital and tech startups. And of course, because of the tech startups and the venture capital, they had connections in the crypto world. So long story short, a compression of liquidity led to SVB having to sell bonds and raise capital in order to have enough cash to match deposits. A compression of liquidity just means there was a run on the bank. Depositors in fear of insolvency then piled out of SVB, exacerbating the liquidity issue. So again, run on the bank, not enough assets, not enough liquidity, SVB got in trouble. He's got another comment here about Mt. Gox. Mt. Gox early repayments will start from March 10th with a deadline to be paid out by September 30th. Overall, about $4 billion worth of Bitcoin will be unlocked. And that's separate from what we're talking about today with the banks. So that doesn't really affect what I'm talking about today as far as banks goes. So Coinbase and Circle is important because they are the two big companies behind USDC. And of course, Circle, the bank that's behind Circle is Goldman Sachs. So Coinbase and Circle will move heaven and earth in motion to save USDC, as this is their golden cow, and the whole industry is in a bad way if it dies. And this is really important to know. Circle generates about 4% on 80% of its base assets. So $32 billion of what they have as its base at a 4% profit is roughly $1.2 billion a year. This is a cash cow for them, and they are not going to idly sit by and let USDC crash and burn. This is good for you and I if anybody else is holding USDC, which is why I decided not to panic, and I didn't do anything in these last few days when everybody else was panicking. So the next question I'm going to bring up is who will be next? And from the little bit of research I've done, it appears that Credit Suisse is the most likely candidate. And that's all I'm going to say about that one today. Here are today's bank failures, or how are today's bank failures different from the 2008 financial collapse? Well, here's a good point made by somebody else in my group. A point of clarity, depositors in SVB will be kept whole. That's a major difference between now and 2008. Shareholders of SVB will not, and the bank is toast. In other words, the shareholders, they're not going to be made whole, but depositors will. And the bank itself, the company itself is gone. And all of the, the CEO and the whoever else they had in there, they're all gone. This is a stark contrast to 2008, where public funds were used to prop up failing institutions. That's a huge difference. We had to pay for the bailout in the past. We being the people in this bank are not having to pay for the bailout, which is interesting. This is a very different turn of events. Investors in the failed business take the hit on this one. The investors take the hit, not the SVB clients, and this is how it should be, in his opinion, and I 100% agree with him. We'll see what transpires today, but the swiftness of the response and the approach used are, at least to some extent, positive signs our regulators aren't complete idiots and learn from mistakes of the past. I love the way he put that. But wait, there's more news about SVB. I just found out today, just a little bit ago, that one of the biggest banks in the world, HSBC, has acquired or is about to acquire or is in the process of acquiring Silicon Valley Bank. And I'm going to read this sentence in case you can't see it. HSBC Holdings. I got this from a London Stock Exchange blog or text or something. HSBC Holdings PLC announces that its UK ring-fence subsidiary, I don't really know what that means, HSBC UK Bank is acquiring Silicon Valley Bank UK Limited for £1. I'm like, huh? So does this mean literally like £1? Is that like, I don't know, $1, $20? That's nuts. But it says that HSBC UK Bank is acquiring Silicon Valley Bank UK. So there's a good chance that there's multiple branches of Silicon Valley Bank, and it could be that only the UK portion of that is actually being bought. It'll be interesting to see how this plays out. And in my opinion, there's 3 reasons all these bank failures have happened. Too much easy money has been available to banks due to Fed policies. And when the banks have easy money, they go out and put it to work. And they put it to work in very, very risky assets. Now, as an investor, we're always told to diversify. And too many of these banks apparently didn't diversify enough. They just supported crypto businesses. Now, I like crypto. I'm a crypto geek. I trade it to a degree. I'm a long-term holder. I do passive income strategies. I do yield farming. So I believe in crypto, but I would not invest in most of the crypto businesses that come out because there's so many fly-by-night companies that just aren't going to get it done. And this is what happened to some of these banks. So another reason for bank failures, and they were able to do that. Let me just start to say they were able to do that because of all the money that was available. Banks were throwing money at them because the banks thought that they could make money on it. And sometimes greed will bite you in the butt. Another reason for the bank failures is poor banking practices. They took on way too much liability and way too much risk. And the last one I have is poor money management. And I won't go into the details of what I mean by that in this short little training, but I think those are the 3 main reasons that the banks failed. Too much easy money, poor banking practices, poor money management. Let's see what else I got on here. So based on everything I just said, I decided that the USDC was not in trouble. And so I didn't make any changes to my portfolio. I don't have any USDC outright. I actually own it inside of a couple of yield farming plays. So I wasn't sure if I needed to go close those plays, and I decided not to. And then Zach made this comment a couple days ago, which I thought I'd put in here because that also made me feel that this really isn't something to worry about, is that he's perfectly happy holding 1/3 of all of his stable coins in USDC, 1/3 in USDT, and 1/3 in BUSD. So like a good trader, he's got it spread out. These are his stable coins positions. And I have one other guy. Actually, I think, yeah, this is 2 guys. So both of these guys, this guy up here is somebody I don't know. He holds his stables 1/3 USDC, 1/3 USDT, and 1/3 in just USD cash. I probably wouldn't do the cash part, but that's what he does. And then Zach, of course, is 1/3 in USDC and DT. And then he also threw in Binance's BUSD. Right now, I'm not really trusting Binance USD. Binance has got too much going on, and they're coming under scrutiny right now. So let's hope Binance doesn't end up having a problem as an exchange. So this last point I want to make is this is what I was looking at the other night at 1 o'clock in the morning. If anyone who didn't panic because of the FUD that came out over the internet about the banks, and then somehow that was going to create a problem for USDC, if you didn't panic, you might have noticed that there was an opportunity to make some free money. And one of my guys in my group did do just that. And he put a screenshot up here that he took $3,000 of USDT and traded it for $3,082 of USDC. Because USDC had depegged, he was able to buy more USDC for less money. So, I kind of wish I had, actually, when he did it, it looks like it was only worth 97 cents. If I had done it when it was 90 cents, which is when I noticed that it had fallen, I probably could have made a couple $100 on three grand. So you got to not always buy into the FUD, because sometimes it's accurate and sometimes it's not. That's why you got to do your own research, or you got to find people that you trust that you want to listen to. So I'm going to end today with just a little information that Zach shared with us, and I'll share it with you. The market update. So this was his Monday market update, and this is what's coming down the pipe. And this isn't specific to crypto, but what happens in the stock market and the TradFi markets, as we call them, it will affect crypto. So there's a big week ahead. In the U.S. consumer inflation rate will be released on Tuesday. U.S. retail sales will also be published on Wednesday, which can help us learn about consumer sentiment. Wednesday producer price data is out. U.S. building permits data is being published on Thursday, which will give us insights into demand in the housing market. And I still expect the housing market to crash in the not too distant future. Fed Chairman Powell stated on Tuesday that the Fed will likely see rates end up higher than initially expected. So that's a change, a little bit of a change in what the Fed has been saying. So now they're going to keep raising rates for a little bit longer. So they're expecting 0.25 basis point hike. Currently, the market is expecting the following probabilities based on what the Fed has said. March 22nd, they're expecting 50 basis point hike, which will get us up to 5.25%. May 3rd, a 25 basis point hike, which will get us up to 5.5%. And in June, another quarter basis hike, which will get us up to 5.75%. And then the Fed says they will likely pause their hikes in July. So we'll see what happens, but I expect the market will probably change, hopefully for the better, when these rate hikes are done mid-year this year. So that's all I have for today. I hope that was somewhat helpful to you, and I'm happy to be back talking to you again on Mondays. If anybody has any questions, or if you have any specific topics you would like to have covered on Monday, feel free to put a note in the comment, and I will do my best to do just that. So enjoy the rest of your week. Take care, everybody. Bye for now.